everyone, I'm Gurleen. I hope you're doing well. The markets have closed at highs and a lot has happened over the course of the week. In today's video, we'll be discussing the weekly market outlook along with the trade plan for Nifty and Bank Nifty for Monday. We'll also discuss a few select stocks which must be on your watch list for good risk to reward opportunities. So be sure to stick around till the end of the video and don't forget to hit the like and subscribe button and do ring the notification bell so that you never miss an update. So without any further ado, let's dive in by looking at the technical perspective of Nifty 50 on the weekly time frame. So here on the weekly chart, you can see that Nifty is trading close to the supply zone of 18,350 to 18,444 and the index is also closed below the same. So is Nifty going to break this zone on the upside, or are we going in for a slow grind towards the downside levels? Well, stay tuned to find out. Now let's take a look at the daily time frame and thereafter we'll discuss the trade plan as well. Now with reference to the last video, Nifty has surpassed the upper boundary of 18,270 to 18,300, but as we discussed on the weekly time frame that there has been a constant rejection from the highs. Now the failure to move past the highs is a sign of exhaustion, and here it's possible for the index to slow down and continue to consolidate within this wide range. Also, long bets should only be placed above the resistance zone so that you do not get caught on the wrong side of the trade. So, looking at the overall structure, the near-term hurdle for the index is placed at the levels of 18,350 to 18,444 and the maximum downside is capped at the levels of about 17,700. Now let's take a look at the hourly time frame to understand the trading plan as well. As we've been discussing over the last week, as long as Nifty is placed above the moving averages, we can expect sideways to bullish momentum to continue with the volatility remaining elevated. So now let's see how you can plan your trades. First of all, fresh long bets should be avoided as of now and should only be considered above the level of 18,350 as it will be a breakout from this consolidation, and in that case the index can give an immediate target of about 18,390 to 18,444 on the upside on an intraday basis. Also, if this setup gets triggered, you can consider the level of 18,222 as the immediate trailing support. Also, over here, the first sign of a reversal of the trend will be a breakdown below these moving averages, and you can also see that we have a support at the level of 18,222. So here, if we see a breakdown below these moving averages, and also for an additional confirmation, if Nifty breaks this level of 18,222 as well, then a shorting opportunity can be looked at, and in that case, the immediate target on the downside can be considered as the level of 18,115 to 18,040. Now let's talk about the support and resistance levels for Nifty. So the support is placed in the zone of 18,222 to 18,180 and the resistance is placed at 18,350 followed by 18,444. While Nifty was a laggard in the last trading session, Bank Nifty made a move past the level of 43,740 and is approximately 0.56% away from the all-time high level. So it's quite possible for the index to reclaim the highs, but will it sustain or not is a big question mark. Now let's take a look on the daily time frame to discuss the way ahead for Bank Nifty, and then we'll move forward with discussing the trading plan for tomorrow. So as we had been discussing over the last videos, Bank Nifty was consolidating in a range of about 1,000 points, and in the last trading session, the index attempted a breakout at the level of 43,740, which was a very stiff resistance level, and here we were also referring to this harmonic zone, but here you can see that Bank Nifty has also kind of broken this zone on the upside, which depicts the presence of the buyers at every dip. So here, if we consider an extended harmonic target, it happens to be at the level of 44,765. Also, an important point to remember is that for Bank Nifty to head higher over a broader period, it should hold above the 20 EMA placed at the levels of 42,782. With that being said, the question is how to plan your trades. Well, let's understand that. So here on the hourly chart, as we discussed in the last video, that a long trade should only be initiated above the level of 43,740, and here you can see that Bank Nifty did test the upside levels of about 43,905 with a breakout of the level of 43,740. The trading approach is quite simple, and let's switch to the 15-minute chart for that. So here you can see that towards the end of the day, Bank Nifty consolidated in a range of 43,771 to 43,905, and here you can also see that the constant rejection that was coming in from the levels of about 43,878. Now here, what you can do is you can mark this range that I have marked on the chart, and on the upside, if Bank Nifty breaks above this zone of 43,878 to 43,905, so an intraday target of about 44,000 can be considered in the index. While on the other hand, if Bank Nifty breaks below this level of 43,771, then it's quite possible for the index to fall back into this wide range, as you can see over here, and continue the consolidation. Over here, if at all this level gets taken out on the downside, then an intraday target of about 43,550 to 43,600 can be anticipated. Now let's talk about the support and resistance levels for Bank Nifty. So the support is placed at 43,535 followed by 43,415, whereas the resistance is placed at 43,905 followed by 44,151. Let's take a look at the IT sector as well. If you remember, we discussed in one of the weekly updates that Nifty IT was placed at the major demand zone, and we even discussed that the best approach to move forward with the sector was to systematically invest in the ITBs. Now here you can see that the IT index has picked up from the zone and has also filled this gap on the upside. Now a fresh leg on the upside will unfold above this level of 28,348, and Nifty IT can probably test the upside levels of about 29,100 as well. Let's also take a quick look at the small cap and mid cap index. Now here on the chart of Nifty small cap, we have been tracking the small cap index from the levels of about 8,800, and we discussed in the weekly update that it's likely for the small cap index to continue the rise on the upside, provided that it holds on to this recent low, and here you can see that now it's inching closer to the resistance level of about 97.97, which also happens to be a harmonic potential reversal zone. And you can see that as and when the index has approached these levels, we have seen a rejection coming in. So now it's time to be watchful at this front. So all in all, we can say that the immediate resistance level for the index is placed at the level of 97.97, whereas the support levels on the downside can be considered as the moving averages at the levels of 93.74 followed by 92.42. As far as the Nifty mid cap is concerned, here on the weekly chart, you can see a steep rise from the demand zone that we were referring to. And you can also see that the index is inching closer to the all-time high levels. And here the index has a major hurdle at the level of 32,940. Also, we know that the market never moves in a straight line. So the index is approaching the resistance levels. And here it will not be unusual to see a consolidation or even a dip before continuing the trajectory on the higher side. Now let's move to stocks, starting with Gail. So here on the weekly chart, you can see that Gail is trading in a sideways range of about 83 to 113 for close to 2 years now. And you can also see a contracting pattern that is present on the chart. Well, let's take a look at the daily time frame. So here, as the stock is placed above the moving averages, so here considering these levels at as the immediate support, a long entry can be looked upon at the current levels with minimum risk. So here a target towards the levels of 113 can be considered with an invalidation or a stop loss level of about 103. So in this way, we'll have minimal risk and a considerable reward on the higher side. Let's move to Hindustan UNILEVer. On the weekly chart, you can see that after having reversed from the level of 2750, the stock has been consolidating in a broadening pattern. Now here an interesting development is the breakout above the level of 2588, which is depicting that a double bottom has been triggered. And here the sustenance above the level of 2588, or even if the stock makes a pullback towards the same levels with a low volume, on the selling side, it'll bring in a target of about 2700 with an invalidation or a stop loss level of the low of the breakout candle, which happens to be at the levels of about 2495. Let's talk about Tata Steel. So here you can see that the stock was trading in a rising parallel channel, but here we have seen a price and volume breakdown, which simply means that as the stock broke down of this parallel channel, we also saw a spike in the volumes, which is indicating weakness in the stock. So here it is quite possible for the stock to test the downside levels of about 101, which happens to be a strong support or an immediate support for the stock. So now is the time to be watchful at this front as well. Well, let's see what the week holds ahead. And if you have any queries or questions, feel free to drop them in the comments down below. And on that note, it's Gurleen signing off. Until we meet again, have a good time.